What's up with it, everybody? We back with another episode. Today has been a great day so far. We got the meditation done. The scripture reading is done. The workout is completed. I haven't worked on music yet. I did yesterday. And I actually want to bring up this point real quick before we get started. I was working on this song for like a week straight. I actually recorded it like a couple years ago. I'm going back to trying to get the mixing and mastering right. I have a different perspective on it in terms of my ears and how much they develop. And yesterday I was working on it for like 3 or 4 hours straight, and it was just giving me so much trouble. I'm like, man, like, what am I doing wrong? Like, I'm this close to just giving up on it and sending it out to an engineer so they could just fix the problem and then send it back to me. And then the other side of me is like, nah, forget that. Like, we ain't giving up that easy. We're gonna continue to work, continue to try to figure out what the problem is and trying to come up with the solution. And like 30 minutes later, literally 30 minutes later, I figured out what was giving me trouble. I had to turn around, a little breakthrough. And literally after that, it was all uphill from there. So I just wanted to say all that to let you know, like, don't ever give up. I know you got those two sides of your conscience that's telling you one thing and the other side is telling you another thing, but don't ever give up. Like, always trust your gut, always keep going. Nothing's going to be easy. If you invest in, if you're working on music, if you, whatever other extra curricular activities that you do, just know like life in general is not going to be easy. So just make sure you don't give up. But having said all that, this episode is going to be juicy. It's going to be informative. Again, the purpose of this channel is to educate, motivate, inspire any way that we can. So this video, hopefully you got your pen, pad, notebook, whatever you need to do to take notes, because I'm gonna try to give you some common stock market knowledge I feel that you should have or need before you actually start investing your money into the market. So before we begin, just please subscribe to the channel if you need some of that content. Like the video if you can, share it with a friend, repost on the story would be very appreciated. But man, I'm gonna just get started because I'm excited to show you what I put together for you. So let me share my screen real quick and then we're gonna get this thing going. Let me take a little sip of this water real quick. Get ready. All right. So again, this is just common stock market knowledge that I feel like a lot of investors have before they actually put their money into securities and things like that. So I'm gonna just be going over a few terms, some things I feel like you should know when you first started getting investing. So first question, like people may be asking you is like, hey, like, how's the stock market doing today? Well, I mean, my portfolio is up. I don't know how the overall market is. Well, you'll have a better answer after this slide. So there are three major indexes that people use to track the health of the stock market, to see like how the stock market is doing. You got the Dow Jones, which is comprised of 30 companies weighted by price. You got the S&P 500, which is the top companies rated by market capitalization. And then you have the Nasdaq 100, which is the top 100 technology stocks weighted by market cap. Now, you might be sitting here like, okay, what is market cap? Like, what does that mean? Don't even trip. I got you. I got you on all of that. Don't even trip. Just stay patient. I'm gonna go over all of this. And then once we go over market cap, you'll be able to rewind the video and come back to this slide and be like, oh, okay, now I understand what market cap is. But again, you got three major indexes that usually tracks the stock market. So when somebody asks you, hey, how's the market doing today? We're like, oh, the Dow Jones is up 5 points. The S&P is down, blah, blah, blah. The Nasdaq is down, blah, blah, blah. And the Dow Jones, it mainly represents your blue chip stocks. And again, if you don't know what blue chip stocks are, don't worry. I'm gonna go over that with you. We're gonna go over all of that. So these are just common terms that investors usually use when they get invested. So you got the Dow Jones as the first index. If you wanted to track the Dow Jones, here I highlighted funds, exchange traded funds, also known as ETFs, that have multiple companies that track a specific sector or a specific index and things like that. So if you wanted to look at the top 10 companies that consist of the Dow, you can go type in DIA, which is the symbol on your broker, whatever one you signed up with. Remember last week we went over how to set up your account. So hopefully you set up your account. You had a week to do that. Now that you have your account set up, you can start doing some research and stuff like that. So you could go type in DIA. You could look at the top 10 holdings of the Dow and you can start doing your research there. If you find any companies that you think are interesting, that you think will be profitable over the years, that you think you should invest your money into, then you could keep furthering your research. But You can start there when you're looking at the Dow Jones. And some companies in the Dow consist of United Health Group, Home Depot, and Goldman Sachs. Me personally, I don't really pay attention to the Dow. I pay attention to the S&P and the Nasdaq 100 just because my portfolio reflects that. A lot of the companies in my portfolio, they're really not in the Dow. A lot of the companies that I have, they're either in the S&P, the Nasdaq, or both. So a lot of the companies that I have are not really in the Dow. I don't really care for the Dow, but again, it's still there, one of the three major indexes. Second, you got the S&P 500. Again, it's 500 of the top companies weighted by market capitalization. And if you wanted to track some of the companies that track the S&P 500 or some of the funds, you can track SPY, IVV, or VOO. Again, you could go to those funds. You could look at the top 10 companies of those, and that'll give you what's in the S&P 500. Some of the companies in the S&P 500, you got Microsoft, you got Amazon, and of course, you got one of my favorites, Apple. Thirdly, which is my dog, the one that be taking my portfolio to the top, the Nasdaq 100, baby. And that's 100 technology stocks weighted by market cap. And the only difference between the Nasdaq that separates the Nasdaq from the S&P and the Dow Jones is that the Nasdaq also includes small cap stocks. But on the Nasdaq, if a company is listed on the Nasdaq, they most likely are a technology stock. You do have other sectors that will still be listed on the Nasdaq, but the Nasdaq is mainly for technology stocks. So if you wanted to track some of the companies in the Nasdaq, you got QQQ. You can also look at XLK, and they track like the technology sector. Some of the companies in the Nasdaq 100, you got Tesla, you got Google, which is my top choice, and you got Nvidia. So again, those are the three major indexes. So if somebody asks you like, hey, how's the market doing today? Well, the Dow is down, but you have the S&P and Nasdaq that are up today. So most technology stocks will probably be up if you see that. And a lot of the industrial or other stocks will probably be down if you see the Dow down. So you also have other indexes though that people use. Like you can use the Russell 2000, which is mainly for like small cap growth stocks. You can also use like the volatility index. There's a lot of indexes out there that people use as well. These are just the major three indexes that people usually track to see how the overall market is doing. So let me go to the next side. But before that, you might be wondering like, okay, I got the indexes. You know, I looked at the funds that track each index, but you know, I'm still kind of confused. There's so much information out there. I really still don't know where to start investing my money. Don't even trip. I got you. What you can do is you can break the stock market down by sectors. What I mean by that, there are a total of 11 sectors in the stock market. There's technically 12. You'll see what I mean by the 12th one, but you can break everything down by sectors to make it a little bit easier for you. So there's 11 sectors in the stock market, right? I just want to note before we begin that a company may be considered multiple sectors just on how diverse their company products are, their services are, their lines are. They can be in multiple sectors. So you can have a company that's in communication services and into information technology and consumer discretionary all at the same time, which will provide you with a little diversification just from investing into that one company. But a company is and can be definitely within multiple sectors. So the first sector that we have listed on here is the communication services sector. And the companies in that sector can range from anywhere from like internet providers, social media companies like Instagram or Facebook, telephone companies, everything that keeps people connected, even media companies like Netflix, everything like that, Google. Those would be considered some communication services companies. So companies that keep people connected. So you have XLC and VOX for the funds that track communication services and the top companies that are in that sector. So again, if you wanted to look at the top companies in the communication sector, you could go to those funds and type in top 10 holdings and see what are they holding. And then you can start doing your research there. Secondly, you got consumer discretionary, which is one of my favorite. Consumer discretionary is the sector where people spend money where they do not need to spend money. It's more of a want. It's more like luxury items. So you got like Louis Vuitton, Nike, Amazon, Tesla. All those will be considered consumer discretionary companies. And XLY or VCR are some funds that track consumer discretionary stocks if you wanted to go look at those. Thirdly, we have consumer staples company, which I don't really have a need for in my portfolio, but I mean, the sector is there. If you find a need for it, by all means, go ahead and do your research on it. But I haven't really found any interest in the consumer staples company. It's on my watch list. I have a lot of companies in different sectors on my watch list, but I really haven't found a need to invest in consumer staples. So consumer staples are basically companies that provide items of necessity. So it'll be like household items, food, drinks, stuff like that. So some of the companies that'll be listed in the consumer staples sector will be like Walmart, Costco, Johnson and Johnson, Coca-Cola. All those will be consumer staples companies. So companies that provide items of necessity, stuff that you need to survive. Energy sector is also there. Some of these are really self-explanatory, so I won't go too deep. But these are companies that provide and refine consumable fuels like oil and gas. So you have companies like Exxon, Chevron. If you wanted to track the energy sector, you could go ahead and type in XLE and look at the top 10 companies of that sector. After that, we got the financial sector, which is companies that are involved in holding, moving, or investing money. Some examples of financial companies would be banks, insurance companies, mortgage companies, and stuff like that. So you got like JP Morgan, Wells Fargo, Citibank, and stuff. All those would be considered in the financial sector. And if you wanted to track the financial sector, you got XLF. And I just want to keep in mind that you have these 11 sectors, right? But under each sector, there are definitely subsectors within each sector. And you'll see what I mean by that. So let's go to healthcare. And healthcare, self-explanatory again. Pharmaceutical companies are companies that provide medical supplies. So Pfizer, Moderna, those will all be considered healthcare. Now, what I meant by the subsector. So let's say you wanted to invest into cannabis. What do you think cannabis will fall under? I'll give you a minute to think about it. What do you think cannabis will fall under if you wanted to invest into the cannabis industry? So technically, cannabis would be considered healthcare. So again, that's just a little subsector under that big sector, healthcare. So you have all these subsectors, which I'll show you again on the next slide. But if you wanted to track some of the top companies in healthcare, you got XLV for that. And then we have industrial, which are basically like your manufacturers, transportations like airlines and railroad companies. So you got like Southwest, Boeing, and then you got like JetBlue and all that. So all those airlines and industrial companies, those would be considered the industrial sector. You got XLI for that. And then you have the material sector, which has definitely caught my interest over the past year. These are companies that provide raw materials for products. These could be like mining companies. So if you look at lithium mining companies, gold mining companies, all those would be considered material companies. So if you wanted to track that one, you could do XLB and look at the top companies of that sector. Again, materials has caught my eye over the years. I invested into it for a little bit, got out of it once I took my profit. I'm looking to get back into it once I find some good prices. But materials, I definitely like. And then you have real estate, which is self-explanatory, but basically a lot of your realtors are real estate investment trusts, which also stand, you could abbreviate it for REITs. You'll definitely hear that a lot, REITs, because they've been performing really well just in the time and the economy that we're in right now. REITs have been performing really well. So you have XLRE and VNQ if you wanted to look at some of the top companies in real estate. And another example of a subsector we're going to get to right here. So you have the sector of technology, which is, again, self-explanatory, companies that provide tech items or services. But in technology is so broad that you have so many subsectors in the technology. So if you wanted to invest into semiconductors, the little chips that go into computers, phones, cars, microwaves, everything that we use today, you can invest into semiconductors, which is a subsector of technology. So and then you have XLK that we mentioned earlier that kind of tracks the technology sector. You can also look at SMH, which tracks the semiconductor companies. There's basically ETFs for damn near everything out there. You just got to do your research on there. But you have the utility sector, which is companies that provide gas, electricity, and water, stuff that we need to survive. So you could look at XLU. Some of the top companies would be like Duke Era Energy, Next Era Energy. A lot of those companies in the utility sector. It's a reason that people will invest into utilities, which I'll get into. So. And then the 12th sector, which is technically not a stock market sector, but has risen over the years, cryptocurrency. This is what I meant by the 12th sector. So you got cryptocurrency, which It's a digital form of money that is decentralized, which basically means there's no backing to it. So there's not like any banks or anything backing cryptocurrency. So some of the top currencies, you have Bitcoin, Ethereum, and Cardano. Now, I do want to ask this question just to get you thinking a little bit. If I was an investor looking for safe stocks that do not draw down too much, stocks that I know will provide a steady dividend, a steady return over the years, and won't really draw down, they won't really move. It's not a lot of volatility. What I mean by volatility is how much price action is moving. It won't really go down too much. It won't really go up too much. It'll kind of be stabilized where it's at. I won't really have to worry about my money getting lost, and I can get that dividend back, that consistent dividend back every quarter or every year. If I was an investor looking for that, what sectors do you think I would go to? Again, you can start here. So if I was looking for some safe stocks that provide steady returns over the years, they don't really move too much, which sectors do you think I would look at? And there's multiple answers. There's multiple answers, but I just want to get you thinking a little bit just to see, like, if you were, just put yourself in the shoes real quick. If you were a safe investor looking for just nothing crazy, I just want stable returns. I just don't want my money dropping. You know, I don't really care for growth. I just want steady returns over the years. I don't really care if the company is growing or looking to expand in a rapid growing industry. I just want steady growth. A lot of people, to answer the question, will go to industries like consumer staples, financial, and utilities. Now, why would they do that? Because no matter what stage we're in the economy, these companies are always going to be there because these are sectors of necessity. So even if there's a stock market crash, yes, stock prices do drop. That's just a result of stock market crashes, corrections, or whatever happens. But these companies, utility companies, are still going to be collecting their monthly bills from all these consumers. When we're in recessions, when we're in pandemics, people still got to pay their gas, electricity, and water bills. So these companies are still collecting their revenue. People still are going to use banks. They're holding their money in these banks. So these banks are still going to be collecting their money. Now, I know in the pandemic, and as of right now, the interest rates are near zero. So banks are not that profitable. But you have your utility sector, and then you have your consumer staple sector. If we go back, again, these are your companies like Walmart, Costco. These are companies that no matter what, people are going to still use them, no matter what stage of the economy that we're in. So if you were looking for safer investments that really don't grow too much, they're not that volatile, well, you can go into these sectors to see, okay, I know that no matter what, my money is somewhat a little bit safer here, as opposed if I were to put it in something more risky like technology or consumer discretionary. I know what consumer staples will give me. I know what utilities will give me. They're always going to be there. People are always going to need these companies. So I'll put my money here just to give myself a safer investment, just to answer your question, just to get you thinking a little bit, to start opening up your mind and start thinking like an investor. So hopefully that helped you. And then for this slide, we're just going to go over some of these terms. So remember in the beginning, if you didn't know what market capitalization meant, don't even trip. I got you. So market cap is basically how much a company is worth according to the stock market. So you can calculate market cap by multiplying the number of shares outstanding and the current market price. So I know me personally, I use TD Ameritrade. So when I type in the company on my phone or on the computer, it'll show me the number of shares outstanding. If you don't have it on your brokerage, you can find it somewhere like Yahoo Finance, Market Watch, Seeking Alpha. You'll be able to find it. So don't worry. Like if it's not on your brokerage, you can find this information. All this is public. So the thing about the stock market companies that are listed publicly, all their information is public. You can go look at their financial sheets. You can look at how the stock been performing ever since it came publicly traded. So you can go look at all this information. They're not hiding anything from you. Just go find it. But you can find market capitalization by the number of shares outstanding times the current market price. So if you look at Apple, which is trading at 100, well, in this example, it's not trading at 100 right now. But just for the example. So let's say Apple is trading at $100 and the number of shares outstanding are 10. Well, you multiply the number of shares outstanding, which is 10, times the current market price, would give Apple a market cap of $1,000. So That's how the calculation is made. So if we go back again, the S&P weights all companies by market cap. So if you go look at the top companies in the S&P, you have Apple, you have Google, you have Microsoft, you have Amazon. All those companies will be considered large cap stocks. So if we go back here, you will see a lot of investors use small cap, mid cap, large cap. They're referring to market capitalization. How much is their current market price times the number of shares outstanding, which gives you market capitalization. So you hear a lot of investors talk about small cap, mid cap, or large cap. So you know what they'll be referring to now once you hear market cap. Now, blue chip stocks. These are well-established companies, and they are considered safer investments because of less volatility. So these are companies that are respected in terms of their industry. They have well-established positions. You don't really see them going anywhere anytime soon. That doesn't mean that they can't go like out of business or go bankrupt or anything like that. There's no guarantee in life like that for anything, especially investing. But blue chip stocks will be considered your well-established companies like Walmart, who dominate their respective industries. And you know that they're pretty much not going to go anywhere. Again, nothing's a guarantee though. So if we go back here, again, the Dow Jones mainly represents a lot of your blue chip stocks. So if you look at some of these companies that's in there like Goldman Sachs, United Health Group, Home Depot, you can go see what they mean by blue chip stocks now. So let me go back here. Now you also have bullish and bearish. So when investors say like, I'm bullish on Tesla, that's just basically means they believe that that security, that specific security will rise. So if somebody's bullish on the market, they just think that the stock market will continue to rise. So somebody say, I'm bullish on Apple. What do you think they mean? Well, they think that Apple is going to continue to rise in its stock price. If somebody is bearish, that's the opposite. They think that the falling security or market will continue to fall. So if you have an analyst on this side that's bearish on Tesla, they think for some reason that Tesla isn't going to perform how a lot of people think it will perform, and they think the stock price will drop accordingly. If you have another analyst that's bullish on Tesla, they think that Tesla is just going to outperform and kill all expectations, and the stock price will rise accordingly. So you also have value stocks, which is companies considered to be trading at discount. So how they perform, how the company's been performing, other things that they look at like PE ratio and all that, which you can go look at all that stuff up if you want, but these are basically companies trading at discount compared to the company's performance. So if you go and look at, like, if you go to the grocery store and you look at like the value section, like, man, I always get this chicken for $5. Now it's $2 this week. That would be considered like, okay, it's value, because you know what that chicken could give you. You know the type of flavor that you could put on that chicken and really sauce it up. So once you're eating it for dinner, you're like, man, I can't believe I got this for $2. That's how people look at value stocks when they looking into the stock market. And value is all dependent on what the investors think. Investors are the ones who give companies and stocks value. So if you believe something is on discount because you think the company's been underperforming or overperforming and the stock price really doesn't reflect that, then by all means, like, that means your personal beliefs, the little research that you put together, you think that company is on value. So you also have growth stocks, companies that are expected to grow at a rapid rate. And this could be due to like a rapid growing industry, innovation, or other factors. And these stocks usually do not pay dividends. And if you look below that, dividends are distribution of profits to shareholders. So a lot of stocks, not every stock, but a lot of stocks, they do pay dividends just for you holding the stock. So if you were a shareholder of Apple, I think the last dividend they paid was 22 cents. Some companies pay dividends every quarter, which is every 3 months, and some companies pay dividends every year. And then you have some ETFs that pay dividends every month and stuff like that. So if you wanted to look at dividends, it's just a distribution of profits to the shareholders. So you have the growth stocks, which means companies are expected to grow at a rapid rate due to a rapid growing industry. And then you got the technical analysis, which is basically how a company stocks perform. So if you look at technical analysis and fundamental analysis, there are a difference between them. And I want you to kind of think for a little bit what the difference between that is. Again, technical analysis is how a company stocks perform, and fundamental analysis is how the company performs. What do you think the difference is? So technical analysis is when you pull up a chart and look at how the company stock has been performing over the years. This does not always reflect how the actual company itself has been performing. What I mean by the company itself is, okay, how much revenue are they bringing? How are their product lines doing? If we look at Apple, are the AirPods selling as well as we thought they were? Is there a new iPhone release selling as well as we thought it was? Is the iPad selling? Are the Mac selling? And again, the stock price does not always reflect how a company performs. So a company can be doing really, really, really well, but the stock price does not reflect that. So the technical analysis is how the company stock is moving, and the fundamental analysis is how the company itself is performing. So these are a lot of the terms that I feel like investors usually use to try to get normal people like us confused, but it's not really as difficult as they try to make it seem. They just try to scare us. So don't even trip. This PowerPoint was put together for all that. Hopefully you learned a lot. Hopefully I taught you some of the things that I know. And lastly, I want to go over the chart of the day. I know it's kind of hard to see, but this is a chart of the S&P 500 ever since its inception. So if we look at this, and again, I know it's kind of hard to pull up a chart a whole century. It's kind of hard to fit a whole century on one page, but here you have a low of $4.41, and that was back in 1932. Now, if you look at the long-term trend of the S&P 500, what direction do you think is trending towards? And again, we read from left to right, so we looking from left to right. What is the trend of the market? I'm gonna tell you this: if I start here, it ain't going down. See my mouse up here, top left, is not going down. We're gonna start here at the bottom. If I connect it all the way to the top, that is a uptrend. So this is since 1928. And the stock market has been rising since 1928. Now, of course, you have your small dips here, which kind of symbolize recession, stuff that actually goes on in the world, stuff that we can't control. Recessions, depressions, pandemics, like this drop here. Like this is stuff we can't control. This is stuff that goes on in the world. So like, of course, sometimes the stock market is going to reflect what's happening in the world. If we in a recession and a pandemic, then I mean, everybody's losing money, not just people, not just investors. Everybody's losing money. But there are ways you can hedge that as well, which I won't really talk about. But the point of all of this chart here is to show you that ever since its inception, the long-term trend of the stock market is rising. Why wouldn't you want to invest your money into a security or a market that is constantly rising over the past 100 years and it hasn't showed you any signs of it going down anytime soon? Yes, again, you have your dips, you have your dips, you have your dips, you have your dips. But that's when you're looking at it from a short-term perspective, that's the only time it should scare you. If you're looking to hold your money for a long time in the stock market and make smart long-term investments, then you cannot go wrong. Look at this. It's a long-term trend of upwards. The stock market is going up ever since its inception, since the 1920s. Why do you think all of a sudden it will start dropping in 2021, 2022, 2023? You think the market is just going to be like, all right, he started investing, she started investing, so I'm gonna start dropping now. I've never dropped since the 1920s, but I'm gonna start dropping right now. Nope. Long-term investing will show you that there is growth. Your money will grow for the long term. You shouldn't have a short-term mindset. Everything should be long-term because this chart shows you that. We don't know when there's going to be drops. We don't know where there's going to be pandemics. We don't know when there's going to be recessions. So if you're looking to make short-term money, I mean, I can't help you. But if you're looking to make safer long-term investments, that is the way to go. And this chart reflects that. History does not lie. Charts do not lie. Stats do not lie. And this is showing you that. Statistics is one thing that doesn't lie. When we look at sports, you can talk all the trash that you want, but I mean, if you look at stats, nobody can say that Kobe, Jordan, and LeBron were not one of the greatest of all time. Like, stats show that. Kareem, stats show that. So statistics do not lie. Here you can see that. So, and hopefully everything there helped you. If you could guess here which one is the cover art to my new song that I'm working on, then I will share with you some of the stocks that I have on my watch list and some of the prices I'm looking to get into those stocks. You can see that these three cover arts here. Which one do you think is the one to my new song? You comment left, middle, or right, or you could hit me up in the DMs and then we could talk some stocks. But I put all of this together just so I can help you understand a lot of the common knowledge that a lot of investors have in the stock market. They try to make up all these terms. They try to say a lot of things to make you feel stupid or try to belittle people. But we here, like, we're gonna let them know that we here making the money in the stock market just like you are. And I don't need to try to sound as smart as you do. Like, we know all the terms. They try to confuse people. When you look at articles, the media is gonna try to confuse you, but you know some of these terms now. Again, I can't do all the research for you. Now you can got these basic terms and you can start building your own vocabulary yourself. You can start researching some of the companies in some of the different sectors that you've seen. Again, you got 11 sectors, 12 with cryptocurrency. So now you can start doing research by sectors. Whatever sector interests you, go ahead and start there. And remember, it's all on your own timing. You don't need nobody to rush you. You don't need nobody to be on your back talking about, man, you got to put money in now. Don't listen to none of that. The market is always going to be here. There's always going to be opportunities for you. So just make sure that you're taking your time and you're doing your due diligence. Hopefully you enjoyed this video. This channel, again, we here to motivate, educate, inspire. If you want a channel to hear some bars getting spit, you know where to come. You know where to find me. Subscribe, baby. So that was a wrap. We're gonna be back next week with some more informative tools. Hopefully you enjoyed this. This video is always gonna be here for playback. Again, it's Juice. We out this thing.